Good morning, you're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Tuesday. Is it high time to allow businesses and establishments to operate in full capacity? Business leaders say yes, as they support calls to de-escalate Metro Manila to alert level 1.
The Bangko Sentral says there's enough room to keep policy rates low.
Fuel prices climbed for the 8th straight week. Year-to-date, pump prices have now increased by up to more than 10 pesos per liter.
And a new player on the local bourse, Citicorp REIT debuts on the stock market today.
All right, Dan, before we delve deeper into our top stories, CREIT listing today, how is our latest addition to the bourse doing on its debut?
Pretty good, Jess. You can see that on my terminal here. It is now trading at 2 pesos and 75 centavos. It's up about 19 centavos from the listing price. That was listed at 2 pesos and 55 centavos per share. And indeed, this comes after much anticipation. On the final date, it was pushed back. It was supposed to be on Feb 17 or 18. And we finally have a new REIT. And what's most interesting about this, Jess, is that this is linked to solar power assets, not, just land, but really the assets. And also it's going to be a renewable investment, energy investment, and also a REIT in one. So again, exciting times. And this does come, as we can see on my terminal here, the performance of the other REITs that we have listed already. And yesterday we had RL, which is Robinson's Land, commercial REIT, and MREIT advancing against the declines in the PSE. And you can see that the best performer here so far, you've got 83% up for the A REIT since at least August 2020, since this new type of product started listing. Now let's take a look at our own bourse and how we're doing this morning. Actually down a touch by 0.6%. I'm going to be pulling out the 3-day chart for you so you can see how topsy-turvy it's really been. We've tried to go back to those levels of 7,500, which we broke through, but does not seem to be the case. Still trading at 7,300 levels. Yesterday's one standout, I wanted to take a quick peek at that. SM Prime, going down as expected. That's, of course, after having a jump 4.5% yesterday. A bit of a pullback. This comes, of course, on the back of them reporting their 2021 earnings that was up 21% to the tune of 21.8 billion pesos. It's on the back of their 2021 revenues at 82.3 billion pesos. Fourth quarter lang, Jess, that was up 20% when it comes to their sales year on year in the fourth quarter. Now, President Jeffrey Lim is saying SM Prime is set to pursue business expansions, funding options. They're going to be looking at funding options locally and internationally. Now, when you take a look at the different sectors, the rent income in the malls, that improved 6% in 2021 compared to 2020. And when you take a look at their businesses in China, that actually reported a 20% jump in revenues last year. And when you look at the ones heavily hit, offices, hotels, convention centers, even that climbed 4% higher to 6.6 billion pesos year on year in 2021. But this came, of course, as their parent actually dropped the most in 23 months yesterday. That fell by 7.7%. And finally, still on the topic of fundraising, just a quick peek at our CBC trading flat this morning at 20 pesos and 90 centavos. This after they had a new fundraising round. This time, it's 14.75 billion pesos worth of proceeds from ASEAN sustainability bonds that's due in 2024. They did mention that the appetite for these sustainability bonds were 5 times oversubscribed. That will carry a 3% coupon and will refinance their maturing liabilities and go to other funding purposes.
All right, in other news, business leaders want Metro Manila to de-escalate to the most relaxed alert level soon. That's to help the economy further recover from the pandemic. PCCI President George Barcelona says he supports calls to ease NCR to alert level 1, but it must be supported by increased capacity in public transportation. Meanwhile, Presidential Advisor for Entrepreneurship Joey Concepcion has renewed his pitch to move down to Alert Level 1 by next month and open all businesses, including casinos. Health Secretary Francisco Duque says the government should first vaccinate at least 80% of the vulnerable population or those people with comorbidity and senior citizens before de-escalation to Alert Level 1 can be considered. Metro Manila is under Alert Level 2 until February 28. Now, to find out more as to why they're making the push to ease to the most relaxed quarantine level, we have on the show George Barcelona, President of the Philippine Chamber of Commerce and Industry. Good morning, Sir George. Thank you for joining us today.
Morning, Jess. Morning, Don. Thank you for inviting me.
Okay, so again, you're joining calls to ease to Alert Level 1, but is it really the right time to make that push, especially at the thick of the campaign season? Come March, of course, we are expecting local campaign to kick off. Are you not worried of a possible surge here?
Well, Jess, we are optimistic that with the data that's been trending the last month, that the infection rate has been going down, and so has the morbidity. But we will still follow the science-led decision-making, and hopefully that it will sustain the downward, and the Alert Level 2 can be reduced to Alert Level 1. Now, what I'm saying is that, we still have about more or less 10 days to see how this would affect us. Actually, my analysis is medyo anecdotal. If you look at December, although it was areas are declared Alert Level 2, but the reality is there are segment of our society that were practicing Level 1 already. Many people are out, the social distancing, we're not really following the protocols. I was expecting a surge sometime in January and Feb, but fortunately that did not happen, and the downward trend continued. So that gave us, an optimism that the lowering can be justified. But again, we have about 10 days to observe, and let's see.
Now, given that as well, like what we reported earlier, you have the health department, at least Secretary Duque, saying that we at least have to vaccinate 80% of the vulnerable population before we ease to Alert Level 1. Is this a worry for you? I mean, by experience, whenever cases are down, we've experienced this last year, vaccination tends to slow down as well. Isn't this going to be a repercussion if we ease to Alert Level 1?
Well, originally the percentage that we're targeting for population protection was 70%. And we're now reaching more than 60%, 62, 63%. But having set the new target of 80% may be quite a challenge. But it's doable. But I would like to think that that shouldn't be the basis, the hard facts that we will follow that before we go down to Level 1. But again, they have the numbers, and I would say again, the science is there. But let's look at the fact that we're opening up the first quarter of the year. We ended quite positive sign the last quarter, and we'd like to the first quarter of the year to continue its upward trend in the economy.
Okay, Sir George, I want to pick up on one point you raised earlier about mobility already increasing even as we were in Alert Level 2 as early as December. Even the situation on the ground now would show that restrictions are somewhat loose. You have mobility already increased as if we're already under Alert Level 1. But like what you mentioned in the briefing yesterday, what would be needed here is sufficient and efficient public transportation. How do you suggest we go about that? Are we ready to handle mobility increasing once again?
Well, definitely they have to field in more public transportation. With more people, commuters, going to work or doing their daily chores, the transport is a very key concern. And also the protocol cross-border. There are areas wherein their level may be different from the NCR level 1. So how do you deal with that? You cannot bring in commuters and at the cross point ask them to disembark and then take another ride. So those are the issues that even in our chamber, we're thinking of holding a meeting and getting the stakeholders to discuss this matter. Because all of these issues on transport really affects the growth of the economy.
Sir, this is Danny shifting the convo to the renewed threats of those trade sanctions by the EU due to the alleged human rights abuses in the Philippines. They've made such warnings before. This was dismissed by the administration as fake news. But should we be worried about this when it comes to our GSP Plus agreement not being renewed?
Yeah, we are worried in two fronts. One is that renewing the call for again sanctioning us is not justified, and it projects us in a negative way, which we do not believe that it should be. As taking off from what Secretary Mon Lopez has said, these issues have been discussed in the past so many years, and the government has shown that there is no factual data that can be used to take out this privilege. Aside from that, yes, we are concerned. Our export to Europe has been increasing. Of course, due to the pandemic, it has gone down the last year and a half. But our usage of the GSP Plus is rated about 70%. Which is really beneficial to exporters. Areas such as electronics, such as leather goods are big items that we export to Europe. But having said that, I would like to think that they look at the facts. I know that there's always some back noises, but generally speaking, the last 2 years, I can say that these issues that they're talking about has no bearing.
Okay, sir, on the topic of exports, your outlook, you can see as well on my Bloomberg terminal here, we had a peak in the middle of at least last year, but it seems to be declining. We're steady. This despite the reopening of the global economy. What's going on here?
Well, actually, our numbers could have been better if not for the logistic issue. There's been a lot of shortage of cargo vessels to bring our goods to both North America and Europe, and that's the things that's hampering. And during freight cost is still very high. Some of the to certain countries is about 2-3 times their normal freight cost. So that has somehow hampered more exports. But the outlook is quite positive. As you said, the European economy and the U.S. economy is picking up, and we'd like to take advantage of that. The market is growing also.
All right, Sir George, before we let you go, of course, the country is entering a very crucial juncture here with elections months away here. I know you've held a forum with the presidential candidates here. Are we expecting the PCCI to endorse any aspirant? And who among the candidates would you say has the most business or investment-friendly policy?
Well, from the business sector side, we're really non-partisan. What we really look for is for the election to be credible, should be honest and transparent. And whatever the decisions of the voters, we should abide so that the transition would be smooth, because that would reflect on our country's image abroad. We think that overall the COMELEC has done a good job, and the private sectors have been on top of how to promote their candidates openly and fairly. So if the decision were made by the voters, we just have to respect that. We don't want things that would happen that is, maybe it's a bit too extreme, that what happened to the U.S. And I would think that the Filipinos are well aware of the issues on this election. We need to bring our country forward, economically speaking, and to be able to sustain our growth. Thank you.
All right, that of course is the hope that our voters are well aware of the needs, especially for the next administration. Thank you very much for your time this morning. PCCI President George Barcelona. Thank you, Sir George. Stay safe.
Thank you, Jess. Thank you, Dan. Have a pleasant morning.
Now, coming right up, pump prices climbed for the 8th straight week, pushing the prices of some agricultural products to increase.
That and other stories when Business World Live returns. Stay with us.
And you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
BSP Governor Ben Jocno says there is some room for the central bank to maneuver on monetary policy that's amid manageable inflation and the improving economy. Jocno gives more details on Bloomberg Markets China Open. Let's listen in.
We closely monitor the developments abroad, and I know most of my counterparts in Latin America and Europe and even in this part of the world, they have started tightening. But we have decided to wait a little bit. And we are actually, we just had a policy meeting. We continue to set the rate at 2%. So I think we still have room to maneuver because the inflation outlook looks good, and that, of course, growth also is picking up, and unemployment is going down. So we'll wait until what happens in the U.S. and the extent to which they will tighten.
I was about to ask you that, and I'm glad you brought that up, Governor, because on the weekend, I'm not sure if you saw, economists from JP Morgan now expect the Fed to hike 9 straight times. If they're correct and the BSP holds, that's going to take the Fed's rate above the BSP rate, I think, for the first time in as long as I can remember. How quickly is that window for the BSP to sit in rates closing?
Well, if you look at the inflation rate in the U.S., it's 7.5%. Our inflation right now is 3%. So you have to consider that the real interest rate is what matters. And we evaluate how the Fed's rate will affect our output and of course our inflation rate. And by the way, we have already actually, without saying this publicly, we have started our own version of adjustment. For example, our assistance to the national government, which was in the neighborhood of 540 billion pesos, we have toned that down to now 300 billion pesos. And also our participation in the government securities market, we have during year one, which is 2020, we were holding something like 22% of the total volume. It's now down to 4% last year, 2021, and now first 2 months of the year 0.25. So we're having our own version of slowing down our assistance to the national government.
And Governor, you did speak to us just about a month ago, saying that you prefer to see maybe 4 to 6 quarters where you see steady economic growth, unemployment around 5% before raising that key rate. I just wonder, where are you in terms of those thresholds now? Are you close to hitting them at this point? What's your take?
Yeah, as I mentioned, unemployment is going down, despite the fact that labor participation rate is up. So we're okay along that path. GDP grew in the last 3 quarters of what are the third and the fourth quarter. So we have 2 more quarters to look at, and so we're just right where we want to be. And so we have another policy meeting next month that will coincide with the Fed's meeting. So we'll have the time to evaluate the situation. And I tell you, we monitor the situation almost daily.
Okay. What do you think is the biggest risk to growth this year then, Governor? Is it more about global financial conditions that are tightening, or is it runaway global inflation as well? And with that, are you still confident that you can hit your growth targets?
I think it's still COVID. We don't know whether there will be sufficient vaccines going the entire world, because I know the uneven distribution of vaccines. So we don't know when the whole world will be vaccinated. And of course, now the political tension in Russia and Ukraine. We don't know what will be the end game there, right? And so those are the two, to me, the major determinants of where we'll be this year and next year.
Oil prices climbed for the 8th straight week this week, causing some commodity prices to follow suit. After the latest round of price hikes this morning, pump prices have already increased by about 8 to 11 pesos per liter since the start of the year. Now, aside from ordinary motorists, the consistent rise in oil prices is also affecting the agriculture industry, causing vegetable prices to soar. The Energy Department is still pushing for interagency cooperation to give fuel discounts to motorists and other affected sectors.
Ng immediate term talaga na maitutulong ng gobyerno, magkaroon ng targeted relief. Sa DOE, tuloy pa rin yung appeal namin sa mga oil companies na ipagpatuloy nila yung mga discount. Baka pwede nga nilang dagdagan pa yung mga gas station na nagpo-provide ng fuel discount, di ba? O kaya bukod sa dagdagan pa yung discount.
Analysts warn that the Philippine economy may face risks from mounting debt. That's amid the impending global monetary policy tightening. UP School of Economics Professor Renato Reside Jr. said the country might be vulnerable to rising interest rates due to the U.S. Fed possibly reversing its monetary policy stance. Reside said the depreciation of the peso could also be a fiscal risk, considering the country's external debt. UP Solera Professor Rene Ofrenio also noted that government debt service could reach about 2 trillion pesos a year on a debt-to-GDP ratio of 60%. Ofrenio said the government should adopt a just debt policy that will involve more thorough audit of the borrowings.
The government's non-financial assets have been valued at 1.9 trillion pesos by the end of last year. That's a growth of over 360 billion pesos. This amount represents some 5,800 assets, mostly listed under the Transportation Department and its agencies. The Finance Department says the registry contains over 380,000 separate assets, including roads, bridges, hospitals, power plants, and irrigation facilities.
The SEC has drafted guidelines that will allow investment companies to be formed as umbrella funds. The regulator explained that the move would offer fund managers, quote, greater operational flexibility and cost savings. An umbrella fund is a registered open-end investment firm which can create sub-funds with segregated assets and liabilities. Both new and existing open-end investment companies interested in adopting an umbrella fund structure will be covered by these drafted rules.
And this from the Philippine Star. Nomura warns the Philippines may get a credit rating downgrade from Fitch Ratings after the elections. Nomura said that the decision of Fitch to retain the BBB investment grade and negative outlook of the Philippines last week could pave the way to a downgrade soon. The debt watcher attributed this to weak economic recovery, the risk of scarring effects, and uncertain prospects for the medium-term path of fiscal consolidation. And that's a first look into the business today this Tuesday, February 22, 2022. I'm Jess De Los Santos.
I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.